Every coin has two sides. One side where a lot of people are losing money and their portfolios because of this downturn happening in the market, and weak hands selling their portfolios and losses. On the other side, there are people who are actually making good money out of this current situation. And actually, this is the best time to buy your favorite stock. Let me give you some incredible ways with which you can make good money out of this stock market situation. See, now one thing is established that we have to buy our favorite stocks at certain level. But at what level? We really don't know when this downturn will stop. So for this, we will be using a certain parameter called PE ratio.
To understand the whole concept, let's understand what is PE ratio first. See, in simple words, PE ratio tells you how expensive is your stock which you're planning to buy. We can easily calculate PE ratio by taking out the current value of the stock which you're planning to buy, divide by earning per share, which is EPS, and then you will get your PE ratio. However, you don't need to calculate this. You can easily find your PE ratio on your favorite platform where you're trading right now. We have to understand one more thing. Lesser the PE value, less expensive is a particular stock.
But here is a catch. We don't need to calculate the individual PE ratio, but we will be calculating the entire Nifty PE ratio to select our stock.
See, it's a simple chart explanation of PE ratio. Here we are looking at what was the PE ratio when the market took major corrections. Somewhere around 2008, if we can see, the PE ratio was 11.71. And in 2020, the coronavirus crash, the PE ratio was somewhere around 18.5. Right now, the PE ratio is somewhere around 19.2. It was somewhere around 18.9 something, but now market has moved up. From past 2-3 days, market is going up, so it's 19.2. What we have to see here is lesser the PE ratio, the cheaper is the market, and it is better to enter the market for more profits on good stocks. Let me show you one more chart. So here is a very interesting data. If you can see, it says if PE ratio is somewhere between 20 to 23, you have to invest carefully. If PE ratio is between 17 to 20, which is right now, it is somewhere around 19 point something, keep investing. We are not looking at this. This is the interesting part. If the PE ratio goes somewhere around 17, from 15 to 17, this is a very good time, and it is a very rare occasion. It is a very good time to invest in your favorite stocks, and you will get the maximum returns out of it. Even in the coronavirus crash 2020, the PE ratio went only till 18.5. I'm saying if the PE ratio comes to this level also, it is a beautiful setup to start investing in your favorite stocks. However, we really don't know where the market will go. It will go up from here. From past 2-3 days, market is going up, or it will go down. So here is a clean strategy which we can use. I'm also following the same thing. Whatever funds you have, large or small, divide them into 3 parts, 33% each. One investment you'll do right now. So you will invest 33% of your funds in this. After this, wait for this current PE ratio on which you have bought stocks to break. If this level is broken, then you will buy another 33%, and you will still left with last 33%. The last 33% you will buy only when the second PE ratio is broken. With this, we will be able to grab the maximum lowest value of PE ratio, which is the stocks which we will be buying from the market will be of cheaper rates.